Good afternoon, ladies and gentlemen. Welcome again to the traders session of the 74th IREPAS conference. These are very interesting times. We all are wondering what is going on in the steel market and what will happen in the near future. Well, I know the weather is really nice out there, so I think we have lost a lot of you guys. I was originally looking at the weather report. It was going to rain, so I said, well, we're going to have a lot of attendees. When the weather is so nice in the beautiful city of Lisbon, I don't think we're going to have as many attendees, even though the subjects that we're going to cover are really, really interesting. Anyway, like we did before, we have asked you to send us your questions and subjects that you wanted us to discuss. And we have received some, and we have briefly talked about it, but the whole really idea is to exchange your ideas with ours. So it would be nice if I could have everyone a little get closer, because I can't even see that far. I don't know who's sitting. I know Attila is sitting at the very, very back. Yeah, I know, I see that. Please move forward so we can see you guys, so we can have you participate with us. It will be interesting. So you cannot leave. We will know when you leave. Well, let's start with the questions. And we had, what we did is we categorized the questions sent to us. And we thought the most and the vital question would be on the supply side. So we wanted to start with those first. And the first question that was we received is about the capacity. And the question was, capacity reduction by all parties, is it possible? I'm assuming the question is about capacity reduction by the domestic and by the mills. Is it possible? And I guess I'll give my input. You know, it's no, it's not. I mean, I think the capacity reduction can be forced on certain mills, but as long as they're profitable and as long as they see an opportunity, the mill's not going to reduce their capacity. They're obviously, for a while in the U.S., we have seen a reduction in capacity in almost all the mills, which was good. But I think we're coming back to the times that, you know, they do not want to work with 65 to 70% capacity that they're working with. That's my intake, and maybe Bernd can add some to it.
Oh no, I fully agree. In our field, the rebar business or long products in general, the business is not too bad. So I don't see any reduction of capacity anytime soon. I think it may even go up a little bit, because 70% for the rebar mills is okay, but it could be better. So they will probably be looking forward to add to it. No, I don't have anything to add to your statement.
I think there's two words here on this: capacity, and that is an actual production. The mills are not going to reduce capacity by closing rolling mills. They're most likely going to get used to operating at 66 to 72% capacity utilization. And this will show its effects in different ways in different markets. For example, in the Western European market, the long product producers have shown tremendous discipline, at least in my opinion, to keep output balanced with consumption. And the major long product producers in Europe, they are surviving. And whereas for example, in China, they produced too much at too low a price, and they all lost money. So that shows no discipline at all. Today's speaker, Mr. Li from China, pointed out that official government policy now to reduce the production capacity by 150 million tons per annum over the next 5 to 8 years. And I'm reminded that OPEC, they have many meetings every quarter about capacity being reduced in order to get prices back up again. But what we've seen now during the past 90 days, a tremendous price movement upwards in steel. So maybe the steel industry is doing something better than the oil industry.
I think what we should do is if you kind of take China away for a while now, because I think there's a lot to be talked, and there's a section on China to talk about it. So I can tell you for the U.S., yes, the capacity was reduced. Well, actually, its capacity utilization is the correct word for it. Actually, was reduced, and some mills really went down to one shift. Some went to instead of 3 shift 2. But to bring it up is very easy. In an electric arc furnace mills, to bring the capacity up is very fast and easy. So I don't really count on the capacity being low for the long term.
But any discussion about capacity utilization is really talking about price support.
Yeah.
And if you exclude China, any change in capacity utilization anywhere else isn't really going to affect anything, as long as China keep producing the 100 to 150 million tons of steel per annum more than they can use themselves. And so either China cuts or China starts consuming more, or we'll continue with this kind of capacity utilization in the rest of the world.
Right. Well, let's do this. Let's continue on this one, and then we'll immediately talk about China, because it has a lot of merit to it, and we should be talking about that. The second question we had is EU and North American producers seems to be behaving as if they will not raise output despite the more short-term profit could be had. Brazil and Russia cannot be predicted. What will they do? Well, I can tell you this, that I disagree on the first part, because I think the U.S. will improve. With these prices that we're talking about today, they will produce more. In fact, I had meetings with few of them 3 weeks ago, and they were all complaining, and when that the price is not really good enough for them to do it. But where the prices are today, I think you will see even more. I have no idea about Brazil and Russia, but thank God Tom's here and he knows Russia. So.
I mean, look, we saw a period through October until about February with a very quickly devaluing ruble, and a domestic price that wasn't keeping up, plus domestic demand and uncertainty, obviously due to the oil price, meant that the Russians came in with much greater export availability than they had previously. Things have stabilized. The rubles come in from 80 to about 67. Domestic consumption in Russia fell by about 10% last year, so from 42 to about 38 million. But it's probably not going to fall significantly further this year. The domestic stockholders, distributors are all buying now. Prices moved up 15% from March to April, and looking like another 15% April to May. And the Russians aren't going to have the big export tonnage available that they had in November, December, January, February. Certainly from the irregular exporters. And seems like the same case with Brazil, whereas second half of last year there was plenty of availability, both bar, rod and billet, and today it's not there.
So do you think because they reduced the capacity?
No, I think because the domestic markets reached some kind of equilibrium. And
next question is on the emerging companies in Turkey, EU, and China. Maybe, Michael, you can talk about some of the Chinese companies that's merging, if there's any.
Yeah. 2 weeks ago, there were 3 steel mills that could not pay their interest costs and pay back some of their short-term loans. And it's interesting to note that all 3 of those mills are electric arc furnace mills, which is supposed to be the future China that Mr. Lee was mentioning, that maybe by the year 2025 or 2028, that 50% of the steel made in China would be made from scrap. So that's a development that is not going in that direction. The Chinese steel mills, there's been lots of talk about merging for the past 15 years, and there's been very little merging. But I do expect with the financial situation and the overcapacity in China and the downturn in consumption in China will lead in the next 5 years to consolidation in the Chinese market. Concerning Turkey, I don't believe that there's going to be any merging in Turkey because of the way the steel business is structured. However, I think most of you have heard about the rumors or the discussions that Erdemir may be the best possible solution for Ilva in Italy. So that would be like Mediterranean steel, maybe a new name that will be on our lips at the next IREPAS meeting. And today, Thomas informed us that Grey Bull has now signed a contract with Tata to purchase Tata Long Products UK. And apparently they have 400 million pounds to invest in the operation. What they paid for it, we don't know, do we?
Well, I think they just take on the liabilities.
Yeah.
Whether there was any,
So that is a bold gamble. It's amazing that there are companies that will make such a gamble. It has a great history, Long Products in the UK. The question is whether they have a great future or not. And concerning other mergers in the European Union, obviously we've been hearing news about Tata cleaning up its balance sheet overall in Europe. They may be interested in merging with TK, ThyssenKrupp. And then we've seen that ThyssenKrupp purchased the Vale's stake, 25% in CSI in Brazil. So I believe that there's going to be a good portion of mergers and acquisitions and consolidation in the steel industry in the next 5 years.
As for Turkey, I can say that there's only one mill that really had to shut down. That's Nursan, and that mill was in the south and supplying steel to the Middle East, mostly in Iraq and Syria, and obviously because of the market conditions, they were hurt. Other than that, really, most of the mills are family-owned, and I don't think they will merge with each other unless somebody gets married with the other. I don't know. So on EU, do you have any more that you can add?
I think Michael's pretty much covered it in terms of real things.
I did forget one thing. ArcelorMittal USA sold 2 integrated plants, one in El Paso, Texas, and one in Louisiana, to Black Diamond Capital Ventures, another venture capital firm, and a rolling mill in Tennessee. So that means that ArcelorMittal is concentrating on flat products in the United States. They no longer have any long product production there. And this Black Diamond apparently sees a diamond in the rough. So how much they paid hasn't been announced yet.
Well, the one we didn't mention as well is Hebe's purchase of Smederevo in Serbia.
Yeah, that's maybe the most important political.
What the purpose of it, and is this going to be the start of more acquisitions by the large Chinese groups in sales markets, so to speak?
Well, we heard about this morning that the Chinese have a lot of capital outflowing, and so they're buying companies here and there, and obviously in steel, for them to have an access to the European and Western markets, they are buying companies. That's one of the reasons that they had bought the Ferco, if you think about it. Well, another thing I want to say is on this venture capital firms buying, certain mills does not mean that it's going to stay that way. Most these guys buy mills and they turn around and resell it. So that means all the mills that's been bought by these venture capitals eventually will be on the market again, hopefully with more profitable, and a better crew.
So what you're suggesting is that they're calling the bottom of the steel cycle now.
Exactly
by
right.
going in.
Well, yeah, exactly right. Okay, the next group of questions was on raw materials, but let's just go back to China, if you don't mind, because there's a lot happening and it's all affecting us directly. So the first question on China was, to what extent can preventing the potential market status of China reduce the country's pressure on the global steel market? I'm assuming the question is really bringing China back to the market economy. And yes, there is a pressure on by the Western world in introducing China to the Western to market economy. But really, that's not the main goal or main pressure on China, because coming into the market economy, they also Europe or Western world will also have a tougher time to impose anti-dumpings as easy as they have done in the past. But I think the main reason for them to reduce any capacity if they could is, number one, the world is looking at them as a threat, and then there's a lot of anti-dumpings going on, and they do not want to have this threat going on. And obviously, environmental is a major reason. They do have an environmental threat, and they do want to have something to do with it. And the third probably is they do want to get into the market economy, so they will have less pressure.
I think
Michael,
I think that the question is based on the person asking the question is that the European Union is supposed to be deciding during the latter half of this year whether to change the status of China.
Right.
And that decision, we don't really know how it's going to go, and it will affect how anti-dumping procedures are put forward in Brussels against China. So it means that if China does receive a market status as a market economy, that means that the European Union Commission will be investigating to see whether the Chinese mills are selling below cost of production with their next door neighbor and with the domestic market price in China. And they won't be compared to, for example, Brazil or other countries that are classified as a market economy. So in one respect, when the prices are low in China, it would be easier to prove anti-dumping.
Any comments from the audience on this one? Because actually, this is an interesting thing, and Tom, do you have any comments?
Well, I think, anti-dumping measures on specific products have been proven to be ineffective and will continue to be. Markets dump Chinese rebar, China starts exporting semi-finished products. And on the other side, access is denied to, say, US processors of wire rod, of the cheapest source of wire rod, and imports of final wire products increase. And it's what needs to happen is actually addressing the whole issue of China and the overcapacity rather than individual measures or trying to deny the market status, which doesn't just affect the steel industry, it affects.
Well, very true. In fact, the next questions on that one, maybe we can discuss all at the same. The question was 150 million tons of capacity will be eliminated during the next 6 to 8 years in China. Is it going to be enough to eliminate the oversupply? The only thing I want to say is there's two different things, capacity and production. China has more than 1 billion, actually, if I'm not mistaken, 1.2 billion ton capacity. And utilization, as we saw this morning, is around 800 to 900 million tons. So I also paid attention to the presentation when the gentleman was saying that they will, on their consumption from 700 million will go down to 550 million by 2025, which is 150 million tons. So, and their promise to us is to bring the total capacity, they said, but actually I'm assuming that they want to mention the production down by 150 million tons. So in effect, if you look at the, what they have to export, which is like 110 million tons, stays the same. Because from what the export pressure that we have is not going to change, because that 150 million ton reduction will be what they foresee as the future consumption reduction.
Does anybody know what the Chinese export has been the first quarter? I think it's at a lower rate than it has been. Huh?
Well, it appears to be, certainly. But
So I think it's going to be difficult for them to come up to 110 million tons again this year.
I mean, the other thing in the more longer term to consider about capacity cuts in China, we're talking about taking out the oldest, most environmentally unfriendly blast furnaces. But as China develops as an economy, you're going to see much greater scrap arisings as you get to second generation cars. And what are the Chinese going to do with their scrap? Is there going to be a new wave of EAF production in China? Will China become a scrap exporter?
Well, they do have, some mills that I have visited, they have both the electric arc furnace and the blast furnace available, and they just go from one to the other depending on the pricing. So I think that, when they have more scrap available, I think they can utilize their own scrap. And I have a feeling that they will be, they will probably have an export tax like the other countries did to prevent the scrap to go out.
That's also against EU rules, huh? The European Union Commission put sanctions on Russia because they put an export ban on scrap exports.
Sure.
And today it's not allowed to export scrap from China. So that is one of the things that the European Commission will have to take into consideration when they review to make China a market economy. It's not allowed to export pig iron. It's not allowed to export scrap.
Well, in theory, there's a, 25% or 20% duty on semi-finished?
Yeah.
But the fact that they mentioned about scrap being more and more available in China is a fact, because as the country become more industrialized, they'll have more scrap available. So, but I have a feeling that there will be more, electric arc furnace mills also coming in line. I mean, China is taking capacity out from the mills that are really old-fashioned and using coal to, to generate their power, versus the newer mills. They have the state-of-the-art mills. So I think the trend, if the new additions may be just electric arc furnace, so they can utilize their own scrap. Any comments from the audience? We don't have any Chinese experts here? I know. I saw some Chinese traders here this morning. Okay. Well, let's go on to raw materials. The question is the spread between the cost of production from ore and scrap are now closed? The spread between the iron ore and the scrap, is it closed?
No, it's increased.
It's increased, yeah.
Yeah.
That's what I thought.
Well,
Yeah,
if it was any, as we saw this morning, it is really widening, and it probably is going to be even wider as we go along.
I mean, if you take the bottom of the market somewhere end of January, early February, iron ore's up, as you said, what, 10% from then? And scrap's up by about 40%.
Yeah.
I did I went back last night and looked at some figures, and to see where iron ore and scrap was in certain periods of, let's say, January. Like iron ore, mid-January of 2016 was about $42. Mid-February, $47. Then it went up to $60, and today is $54. Yeah, I'm just giving rough figures. And scrap,
It's gone up today, hasn't it? Yeah.
Yeah, scrap one
58, I
was, is it 58 now?
Yeah, went up.
Okay. Yesterday, I should say, I'm sorry. Scrap was 180 in mid-January, and February was, it went down to 170, and mid-March was 210, and today is 260. Did it go up again?
270.
He's gone. Okay, so what I did is I tried to look at the correlation between them, and there should be some. And the iron ore went up around 30%, and the scrap went up around 50%. So unless iron ore keeps going up and catches up with it, the gap is not sustainable, is what I think. So either iron ore is going to go up or scrap has to come down, because eventually they have to come up with a certain equilibrium with each other. This is my opinion, but I would like to hear everyone's, because I think this is something that concerns everybody here.
Eventually, we're all dead. The question is that why does ore and scrap have to correlate?
Well, it's
Because it did a couple of years ago. Because I mean, one of the big explosion for scrap was also because iron ore suddenly went through the ceiling, and then scrap followed suit. So I agree with you in principle. There shouldn't be a correlation, but there always is. When one goes up quite a bit, the others will follow.
Well, also, you guys lived what happened last year. You know, when iron ore prices are low, the blast furnaces produce the billets, and the billets come to, let's say, to Turkey, and takes out the scrap business. So yeah, they are related. We cannot just ignore one from the other. But there is a correlation. I think I haven't done it, but I'm sure if you go and look at your correlation over the years, you will see there is definitely, some correlation between them. It can't be not. But do you guys think that where we are on scrap prices today, do you think it's sustainable? How many think that it's sustainable? Raise your hand. One. Let's talk about that too.
Francis, can you say a couple of words why you think it's sustainable?
Well, I think that in the very first place, you must see that iron ore is a natural resource. Scrap is a resource which is coming out of industry, cars which are demolished, factories which are demolished, constructions which are demolished. This is not a natural resource. And in many countries, there will be less scrap. And we heard this morning that the big boys, Vale, the Australians, are still increasing their capacity from iron ore. So I do believe, okay, prices may go down a little bit and fluctuate a little bit, but I'm convinced that the spread between iron ore and scrap will remain relatively the same as it is today. That's my personal opinion.
Well, I do agree that one is coming from Earth and the other one is really you have to gather. But when the scrap went down to 170s, I have spoken to some of my friends who are scrap dealers, and these are actual little stores or shops or distribution centers that they gather. I said, how come you don't have any scrap in your yard? What's going on? And the guy said, well, we're not making any money. Why should I collect? So at 170, nobody was making money, so they just didn't want to collect scrap anymore. So the fact that there's real shortage today, and obviously that is the reason why we have the prices going up, but the shortage is because the collectors did not want to collect at these prices. But when the prices come up to a certain level, they will collect, and you will have more scrap available.
Yeah, but once again, I'm saying it is not a natural resources. If you look in our country, like in Belgium, people were changing from car every 4 or 5 years. This has become 8 to 10 years. Fridges, whatever you You can imagine. So I do believe this spread will remain. Okay, maybe the iron ore will increase, but the scrap will, in my opinion, remain high. Because if it goes low again, then I come back to your point, they will again not collect.
I think in the long run, you're absolutely right, or could be right. But when we're
don't know
talking
if
about
I'm
a
right.
short-term period, when I
If
was
I
saying
was
3
right, I
months
would
to
know.
6 months period, do you think that would make the 3 months to 6 months period, iron ore people can increase their production easily, but and scrap people can collect. Now it will take, even the scrap people today go back and start collecting, it will take another 2-3 months to really have the capacity to be able to export. But I think it's in the short-term period is a different. Long-term, you could be right. I'm
Yeah.
not arguing that.
Francis, I agree with you because iron ore is a supply situation, 100%. And ferrous scrap is a situation that nobody's going to collect unless there's demand. And unless there's a collection, there can't be any usage. But there are electric arc furnace mills all over the place. And as long as they can sell the product and they have their metal margin, they will pay the price that's necessary to collect. And that decision is made every day on scrap pricing, collection. Whereas iron ore, that is a 10-year investment cycle. So one is a barometer of the consumption of long products primarily, and in North America also flat products. So those are the things that are going on.
So how do you explain the price going $100 and down to $50, down to $40, going up to $60? If it's such a long-term deal, then you see the price fluctuation. I'm talking on iron ore a lot less. But when you see these fluctuations, it's because they can stop and they can push on the pedal again and move up again.
It's a daily decision.
But in terms of iron ore, an enormous proportion is supply is centered in the hands of 4 companies.
Exactly.
Whereas with scrap, you have hundreds
Millions.
and thousands of collectors
Exactly.
and hundreds and thousands of
Exactly.
consumers.
Exactly.
So scrap as a market probably more reflects the actual supply and demand situation than the iron ore price.
But then they also mean that because it's controlled by 4 or 5 companies, they can just push it down and up anytime they want.
I didn't say it was controlled.
Okay. It's sold by.
Sold by. Yeah.
Okay, fine.
I mean, yeah.
Sold by, okay. Any comments, guys? So let me ask you this. Where we are going, do you think the scrap prices may go higher in the next 3 months? Who thinks it's going to go higher? And how many think that it's going to stay the same or around this level? And how many think that it's going to go down? I'm assuming the rest should be down.
Yeah, there's some microphones here.
You want to speak? Please.
Yeah, I'm Giorgio Silvestri from Delta Steel. So my opinion is that, let's say we have reached quite a high level of price in scrap, so that's the reason for which I consider it a level from where the price, let's say, will go down, in my opinion, because it's not sustainable, so cannot be sustained, this level of price. This is also connected with what I have heard, let's say, this morning. China is driving this market. Already we are all convinced that either we talk about scrap or we talk about iron ore, we talk about hot rolled coils, billets, they are driving the market. With the capacity they have, with the possibility to change, let's say, the flow of the material, and they have shown during the last month, let's say that they are really determining, as far as concerned, let's say, my knowledge that is mainly in Europe, they are determining also psychologically, let's say, the trend of the market nowadays. I believe that we have first to test, let's say, how the price of the finished product will react, because we have heard that many steel mills, of course, has increased their price, especially in flat products. So we have to see how long, let's say, this trend also in the finished product will remain. As a matter of fact, let's say the comparison also with different period, with previous period, are making me thinking that when we are talking about $260 today as a price of scrap, where the main reason is a speculation in the market, because the scrap price is coming only, let's say, by a speculation. We see what is happening in Italy, in France, in Spain, wherever, let's say, we are touching this subject. So as far as concerns the speculation, when it's going to finish, let's say, this really great push that is made mainly by Turkish, then I expect, let's say, that the price of scrap will go down again.
Any other comments on?
Behind you?
Well, I am Tanous from Felcometa.
Speak louder, please.
Hearing that the Chinese are really concerned about emissions and pollution, they will definitely shift more production into electric arc furnace and even build, because they have this facility to build new furnaces, maybe larger furnaces, and consume more scrap to have less emissions and cleaner environment. Well, this is definitely going to create more demand on scrap, and they will not make available for export. At the same time, we see that the, let's say, advanced countries like United States keep building new mini mills which are relying on local scrap. In the long term, will they make available scrap for export? It will be reduced. So scrap will be really tense and perhaps volatile market, but it will be in bigger and bigger demand, and there will be a limited margins for the steel electric furnaces, meaning that the gap for long products will be again higher than flat products. I mean, this situation will prevail still.
There was another gentleman on the back who had a comment.
Bernd Graber from ATG Germany. I think there are a number of aspects, and we can of course talk about correlation between scrap and iron ore and all the rest of it. The fact is, many people believe, and I would agree to that, we are currently seeing an absolute hype, because there's no logic explanation why prices have been risen by $100 a ton. Because obviously these hypes are caused by apparent buying. I mean, we are seeing apparent buying, but we're not seeing growing consumption in the markets. And I think actually a few people have been caught out during the last couple of weeks. They've been speculating on a falling market. They are short. Many end users, like in Germany, in Italy, need to buy material at whatever cost. And of course, the mills, the domestic mills, jumped on the bandwagon, so did many importers. And actually, I think the prices will go up further, probably for the next 2 months. And then we're coming into the summer slow. Consumption is coming down, and definitely prices are going to adjust. Beginning of the fourth quarter, that's my opinion. I mean, we're not seeing a new low as we have seen it last year, but there is no real reason that this tendency can be sustained over the next 3 or 4 months. I can't see it. If you can, let me know.
I agree with you. Frankly, I was very happy to see the prices start going up. I mean, we traders suffered a lot. We go to talk to our customers, and they all are waiting. They're all waiting for the price to go further down. It came to a point where it just didn't make sense for it to go down anymore. So we've been telling them, hey, this is it. This is the time to buy. And most of them were still resisting, thinking that there is more to it. So it was a great, really pleasure to see the prices moving up. So we saw the bottom. And this morning, everybody was also talking about saying that we have already seen the bottom. So price going up is a great thing. But when it goes with swings too far up, then unfortunately puts us in another situation where now we're going to have to explain the customers again that this level where it is now is still sustainable or not. So obviously, like this group here, most of our customers also think that this level may not be sustainable, so we're not going to be able to convince them to buy as much. Now, fourth quarter, third quarter, I don't know, but we will see a correction. Usually, when the swing goes this fast up, there will be a correction, and after that, it may still move up again. I don't know, but I do expect a third quarter correction, somehow with the level wherever we're going to be at that time, if not sooner.
But we've seen the market pretty much consistently weaken from summer of 2014 all the way until about February of this year.
Right.
And it weakened predominantly because of availability of cheaper Chinese billets. Turkey imported 1.8 million tons of Chinese billet last year.
Right.
A lot of that was replacement for scrap purchasing, and the market's risen over the last couple of months predominantly because of the absence of Chinese billet offers. So as long as China stays out of the market as it's doing today, there's no reason why prices won't go up by another $100.
But you're talking about 1 million tons. If you think about it, the whole market, 1 million tons is not the major factor.
1.8 into Turkey. They also sold to Egypt. They sold to Middle East. They sold all across their own region.
Forecasting is a difficult business.
Well, that's why we all are here, and I just wanted to see, how, what everybody is thinking, and what their customers are thinking. Obviously, you talk to your customers every day, and what you think about if this is sustainable, if the customers aren't. Obviously, most of the mills are selling. That's why they can increase the prices, and the scrap people are selling. That's why increase the prices. So there's definitely a certain short-term demand, but how sustainable it is the question, really.
I mean, the other thing about scrap pricing we discussed yesterday is the absence of availability of slab, both from Brazil and from another UK steel mill in Redcar. SSI closed a year ago, and so the Turkish flat roll producers have been buying a lot more scrap because they don't have availability of slab.
Yeah. Well, one thing that I was explained by the mills in Turkey is that when the prices of billet coming from China was lower than what they can produce scrap-based billets, they just decided to go along with that. When the gap was $100 or so, large number, huge number for them, then they decided to just, to use the billets. But now that the Chinese prices went up and came to there's still a gap, but not as much. So and there's an uncertainty of the Chinese billets. Keep in mind, you don't order today and it's going to come tomorrow. They're not dependable. They don't come right away, and obviously they have also traceability issues. So the mills in Turkey do prefer to use their own scrap, and make their own billets. But if the gap is that big, they go to the extreme of buying the billets from China. So when the Chinese billet prices do, go up to normal levels, because if you think about it, selling billets in $200 some, it just doesn't make sense anyway. So when it went down to normal levels, then the Turkish mills start producing their own billets, and obviously that suddenly created a quick impact and quick to purchase more scrap. So that's probably the peak that we see, that suddenly they have turned, and when they all turned, obviously you cannot get scrap overnight. So, but that, I think, with where we are now, the scrap will eventually be available and be collected, and that may change.
Well, I mean, from my point of view, the Chinese billets really didn't have any impact in the US. The US is a billet producing country. They don't show the billets as a separate items in the statistics, but from what I've seen, from what I've heard, there were no Chinese billets coming into the US. But I agree with the panel, with the comments from the floor, that it is really the price increase of the billets in China that is driving the scrap price now, and that is driving really the market, in my case for rebars and wire rod.
Well, the next question is really something we just discussed. It's what will be the key drivers for global iron ore and scrap prices in 2016?
We just went over that.
Yeah, yeah. So, and next group of questions are just various. So let me start with one. Do you think the demand is supporting the new price levels? Actually, it's interesting. I'd like to have your comments on it. Do you think the demand is supporting the price levels, please?
I think this this Pandale from Utmost in Dubai, I think this is somewhat related to the last subject in that I don't think this scrap price increase has anything to do with either the scrap iron ore relationship or demand. Of course, it has to do with demand for scrap, but it doesn't have to do with demand for finished product. As I think the second gentleman was saying this morning presentation, global economic growth is anemic at best. And I think what one of you said just a few minutes ago hits the nail on the head. It has everything to do with China. The fact that China stopped a few weeks ago exporting billets, that has everything to do with the fact that scrap price is increasing. It has nothing to do with demand. It has nothing to do with anything else. Tomorrow, if China says that let's start exporting again, I mean, the whole thing will turn on its head. And I was talking, and whether that will happen or not, who knows? I was talking to some of the Chinese gentlemen who were here yesterday at the conference, and they don't know. And I asked them, can it change? Yeah, of course it will change. But when? Oh, I don't know. Maybe next month, maybe 2 months, maybe 3 months. They themselves don't know. So why has China started cut down on imports, on exports? Well, they're saying, okay, there is pollution, there is flower show in Tangshan, for whatever reason. But I don't think any of us really knows, and I don't think even many of the Chinese who are not.
I think on the 1st of February this year, there were very few people in this room or anywhere else around that thought that steel prices would go up.
Exactly.
And that is one of the principal reasons why they have gone up, is because nobody was forecasting it.
No, so basically I don't think it has anything to do with demand. I think it has to do with
Chinese internal
situation.
Short-term demand was created because prices went up. People were short.
I think the demand is tricky term. There's two types of demand. One is really the demand that the construction industry really, is demanding to buy steel. If you look at the US market, the construction industry is almost flat. European market is flat. In fact, this morning, Kim Marty was showing on his graphs as well. So really, there is no market that I know is booming so that there is a sudden increased demand anywhere. Now, short-term demand, which Michael is rightly mentioning, is the distributors or the fabricators, how much storage, how much inventory that they have. So I think that it's possible that the inventory levels of the distributors have been very short. And so when there is this price going up, everybody got panicked and they want to cover their shorts, or they want to cover their short-term demands. So they just purchased. They just start purchasing. But overall, none of the economies really changed anything. In fact, in the US, there's a lot less demand on steel because our pipe industry went down the drain. We have mills closing. We have really serious issues going on our pipe business, which obviously is affecting our demand for the scrap for the USA. And the construction industry has been flat. So I was just reading just this afternoon that there's in the first 3 months there's 40 big corporations filed bankruptcy, which Wall Street Journal was citing that this is the highest since 2009 for such numbers. And 2009 in the first 3 months it was 59. I'm just citing the Wall Street Journal to you now. So really, the economy is not booming in the U.S. And as far as I understand, and I will ask Tom to mention that in Europe is the same. So there's no demand. I think what we're doing is creating a short-term spike, which may go out. That's the reason why I was thinking that this may not be a long-lived one.
Exactly, and I think as traders, we have been for a long time, a few 5 or 6 months, keeping very low inventory because our fear always has been that what we buy today, tomorrow will be cheaper, the way things have been going down. So temporarily there is a spike, but I don't see this lasting because once we see that, let's stock up a little bit.
And so you see Dubai the same, right?
Exactly.
In your market the same, right?
Exactly.
There's no big sudden increase in construction.
No, it's been steady. There's nothing special.
So if there's no big construction supporting this demand, then this demand is
temporary.
But the conclusion is that it's the price increases that we've seen are all due to supply constraint rather than demand increase. So should supply constraint change, we've identified that China is the main driver of that. Should policy within China change, we'll see prices fall very quickly.
Yeah, but Tom, you can take the demand quite out of it. It's not. I agree with Don here. It's not a strong demand. It's not what I would call an organically grown demand. It's more what the gentleman just said. It's that people let the inventories go down because the prices were. I mean, it's a perverse thing. I mean, the prices were dropping, and people didn't want to buy because they were afraid that they would get stuck with expensive steel. Okay, that's why for the U.S. you see a spike in demand now. That's why you have these very strong shipments. I mean, I heard some numbers being given to me for rebars that will arrive on our shores in April and May that are mind-boggling. But that has everything to do with the pent-up demand because they didn't order in time.
I had a domestic Turkish mill owner call me late in his night and wanted to know what the hell's going on in the U.S. He says, look, there's suddenly huge purchases done and they still want more. What's going on? I mean, just tell me. And I said, well, there's nothing going on here. It's just that, believe me, there is no more construction than there is already, and there is no more demand than there is already. In fact, if I see anything, I see some slowdown in certain areas. So what is this all about? I said, I don't know. It could be nice speculation for the short term. I don't know. How about the other markets? Is there anybody from here, from, let's say, Africa?
On the African market, I would say that the demand is steady, but you see several markets really going down a drain because of currency issues.
Wow.
If you say like markets like Nigeria, Ghana, Angola, all the markets that are related to petroleum extraction and minerals are extremely slow, and customers have a lot of difficulties to pay their ongoing invoices. So, yeah, if you're looking for the demand in Africa, it's definitely not more. It's not an upturn. It's even slowly going down. I would say that the French-speaking countries are more regularly in the market and have less difficulties to pay their suppliers. But I would say that coming back to the prices, I think there is something that sustains the uprise of prices. It's mostly because we were like 2 months delivery time. Mills were delivering you in 1 month, and now suddenly it's 3 months. So you create an artificial artificial demand that is pure technical, and I think that we are going soon to see the end of that.
Well, I can tell you that. Well, thank you very much. And that's interesting to hear that in Africa it's the same as well. And one thing that, since you mentioned, it's very important to note that the oil prices being this low did affect all the energy producing countries. So the construction in those countries are also slowing down, if not. So really, if you look at the overall world economy, nothing really explains the sudden increase other than obviously the Chinese lowering, holding to their billets for a while. Another thing I'm going to add is, and this was asked earlier, U.S. producers are working with 65, 70% capacity. They'll be happy to increase. Please. No, there's on the back.
I think another factor which is accounting possibly for sharp increases across the value chain, whether it's intermediate products, raw material, or finished goods, is the fact that everybody has been losing money for a long time. And there have been very few opportunities in the last 18 months to make any money at all. So I think everybody's trying to just max out. These are limited opportunities, and everybody's trying to recoup lost ground and lost money. That's possibly another reason why a lot of things have dovetailed at the same time. The fact that China suddenly went out of the cheap billet market, the fact that scrap then maximized their prices, therefore the mills maximize their prices, therefore stockists maximize their prices. They know that this opportunity may be short-lived, maybe it's a small window of opportunity, so why not max out? We don't know when the next opportunity will be.
Very true.
Excuse me, we're all saying that, making comments that China's out of the billet offer market, but that's not the case. They're making contracts every day to Philippines and Vietnam and Thailand. So, and the difference between the Asian market and billets is that Philippines, for example, has to buy billets. They can't produce anywhere near the billets that they need. The whole economy is built on a billet re-rolling scheme. And so they need to have 2.5 million tons of billets. And their market is stable and it's not going down, it may be even going up. And they will pay $500 for billets from China if that's the best price they can get. Because they just will raise the price of rebars in Philippines.
On the profitability that you mentioned, and I think that's a very interesting point. I think it was your Ben's this morning in his presentation. He did mention that the rebar versus the billet price difference went down to $155. $155 is not enough for the mills to make money. So that is not sustainable either. So just when we say this is not sustainable, that low margin for the mills is not sustainable either. From what I understand, I don't know what the real number is, and I'd like to hear you, but you gotta have to have a number higher than 200 from what I understand. Again, from your thing,
No,
it was
Kim.
It was
Kim.
Oh, Kim Marty, yeah. So it is really you need something over $200 margin between that. So really, it's one thing we talk about the scrap prices, then we have to talk about the rebar prices. Rebar prices make sense going up because when the scrap goes on, the product prices going up and in proportion makes sense. And obviously they have tried to use this and close that gap. Also makes sense because in the long run they gotta have, for them to have a continuous supply and be profitable, and they really need that margin. There's no other comments. Let me continue. I think they may all be related to it. Well, the second question was related. Will these prices increase last? If so, for how long? I think we discussed this already.
Covered that.
Yeah. Will the futures markets like LME, rebar, and scrap gain traction? So far little, if they do, will it reduce recent volatility? So I guess somebody's asking about the LMEs getting involved with the billet. I guess that's the only one we had, right? And I didn't think that LME did scrap.
Well, there's a CSI scrap index price, then there's a
They are
paper
here.
market based on that.
There are 3 people here from the LME.
Let's
Not
hear.
maybe here in this room.
Let's stay here. Let's hear from them.
Anybody here from the LME? Scrap and rebar contract? No?
Does LME do rebar and the scrap contract?
Yes.
I didn't know that. Go ahead. The gentleman at the back.
Hi, my name is Yarek. I'm from TSI. The contracts themselves, they're cash-settled contracts. So irrespective of what the spot market is doing for rebar or scrap, they'll still be volatile. The contracts themselves are used to manage the buyers or the sellers' individual positions. So whether or not that changes the volatility of their positions themselves, it's up to them how they hedge their contract. But whether or not the spot physical market itself is going to be volatile or not, that's not going to change.
I was under the impression that the LME halted their, because I remember they were in the billet features and actually holding stock and selling from their warehouse and all that. I thought that has stopped. Is it still continuing?
Yes. Now the billet contract is dead. It's been pulled.
What?
The billet contract is dead.
Yes.
Okay.
But the LME scrap, there's a contract you can buy. Each contract is 10 tons, and the price is based on the CNF Iskandar. Scrap, yeah.
It's similar to, say, the SGX iron ore contract where it's cash settled, or the CME coking coal contract where it's cash settled.
I'm sorry, I couldn't hear you.
It's similar to, say, like the SGX iron ore contract or the CME coking coal contract, whereby the settlement is the average of the month on the index itself, rather than physically delivered.
So do you think the question was, will it have more traction? Will this price increase help the LME or these futures markets to have more traction?
I think with any new derivatives contract, it's up to the participants themselves, whether there's somebody in there to be a market maker to provide liquidity. As I understand, you'd have to ask LME themselves. There's a wide range of companies taking part. They're doing just test trades of small tonnage, and it's been growing month on month. I know the LCH tried to do the scrap contract in the past. That didn't take off. There was not enough interest around it. But so far as I understand, there's a wide range of companies in Europe itself who are very interested in getting this going. And it's not easy to set up a contract, or I'm sorry, not easy to set up an account to actually trade it. So that leads me to believe that there is, let's say, more groundswell support than there has been in the past.
Thank you.
Yeah. Just if people are curious, that you can contact the LME, and they have a scrap forward contract that is running from April 2016 until February 2017. Right now, there's an offer from somebody to buy one contract of such scrap at $235, and there's one seller at $250 for February 2017. And for example, the rebar contract, which is a fob-stowed actual weight contract based on Turkish rebar, there's April 6th, 2016 until February 2017. There's one guy who has a 10 metric ton contract he's offering out to buy at $385 FOB stowed. And there's one contract holder who wants to offer at $400.
Now, you really talk about 10 metric ton or 10,000 metric ton?
10 metric ton. One contract is 10 tons.
Okay. All right. I guess I will have our
So
kids work with that.
the question to the the question was, can the LME rebar and scrap contract reduce volatility? Well, when there is 10,000 contracts settled every day, yes. But when there's 1 or 5, probably not.
I think Eric said it right, that actually it won't necessarily affect volatility as much as it provides a method for risk management of that volatility, right?
It surely makes sense for the mills to use it if there's such a thing.
I think to some extent they've been the least keen on any any possible hedging tools. But
next question is on the growth of construction sector spending in a low commodity price environment. I guess he's asking if the because of the low commodity prices, will the construction grow faster or more? I'm assuming that's the question. Any comments?
It's a difficult question. Let me put this way, the infrastructure projects that we've been talking about in the US for a number of years now, they've never really come about. There were some, but these big projects that they had shovel ready, as they called it in 2009 to combat the crisis then, it really didn't come about. And we still have the need for infrastructure. So do I see infrastructure projects? Do I see a big demand for steel there? Yes. It's just a matter of money. Politicians don't want to raise taxes because then they don't get re-elected. And it's just a matter of funds that the federal government or state government fund these projects. On the private sector, it went weak a little bit in the last year from the last numbers that I've seen. Housing is not too bad, but we are in quotation marks now only at 1.2 million units a year. I mean, we had it at the height at 2.5, more than double. And the commercial construction is kind of weak in the US. So from my point of view, it's a difficult question to answer. It's a year by year, the potential is there. It's just the funding on the private and on the public level is lagging.
I think the commodity prices, maybe we should say steel prices on the construction industry is a factor, but the main factor is the interest rates. And for the US, the second important factor is the employment rates. So when the employment is high and the interest rates are low, obviously you're going to have more construction and that will be supported. So steel prices, if you look at the in a building and the proportion of a steel price, it's too low. So for it to become steel prices are low, now let's do investment. People do not make decisions on investments on steel prices alone. It just helps. And in fact, most of the time it's irrelevant. They just make the decision, and steel it is what it is, what they say.
If you recall our visitor from the Commerce Bank today, he identified the main problem is that you have negative interest rates and people don't have any expectations of having inflation in order to make investments pay off by doing them today in order to use them tomorrow.
So interest rates, yes.
And so interest rates are, negative interest rates is a big detriment to increased construction spending.
True. When it comes to negative interest rates, yes, but really low interest rate environment is definitely a positive because people look at buying a home and they always think about their monthly payments. So when the interest rates are low, their monthly payments are low and they can afford bigger homes. So yes, construction is really supported by that. And what really Bernd is talking about is really real because from what I read recently, Obama administration set aside some, I'm going to say $190 billion for the construction, for infrastructure construction, and so far it's only like 30% of it is really used, and he's about to really retire. And the explanation for that is that there were some shovel-ready, like you mentioned, that went ahead, and the rest are still working on the bureaucracy between the State Department and between, the state and the federal and the local authorities. And they still haven't solved that for those projects to be really put into, construction phase. This is what I read. I'm not sure how accurate it is, but it's Wall Street Journal again. Any other comments? Okay, next question is, how important a role would a minimum import price system in India play in the global market? I have no idea, maybe.
The Indian government initiated a minimum price, and that was one of the supporting things for the scrap price increase, because there was then suddenly a shortage of steel in India, and the electric arc furnaces needed to have more scrap, and they were willing to pay much higher prices for containerized scrap. That was point number one. Point number two is that the major supplier of hot rolled coil into into India was China, and overnight that market was completely closed. And when that happened, I think it was, when was it, February 15th or something like that? Everyone thought that the world hot rolled coil prices would collapse because China had been exporting 800,000 tons of coil to India.
Yeah.
But instead, the prices for hot rolled coil went up.
Sure.
So there's another thing. So, and India has, over the past 10 years, been in certain markets a fairly large exporter of steel, especially for galvanized product. And this means that India is not now a source of galvanized steel or hot rolled coil.
For the US, you mean?
For the USA, yes.
Yeah.
So it means that it makes a bit more tightness in the marketplace.
Well, Vietnam came in line too now, because this is, Michael's talking about the anti-dumping that is filed against the Chinese galvanized coils. And India was obviously the number one choice because it's a proven entity in mills. But recently I had a lot of offers coming from Vietnam as well. I don't know their quality. I don't know if it's any good, but obviously there will be more coming from different sources. And in fact, Turkey was one up until the hot roll prices in Turkey went up. So I don't know if they will be competitive again. Anybody from India here or in working with Indian market maybe can comment? Because it's a big market and I'd like to know more about it. Any trader that works with India here?
India's steel consumption last year was 53 million tons.
Serious?
Yeah. They have a capacity of 85 million tons. So it's not much different than every other place. And the imports, I think, were like, Thomas, 2 million,
I
2.5?
don't have the exact number, but yeah.
I just guessed 2.5 million tons or so, and that those imports are now stopped. So the prices in India have gone up considerably. However, the Indian hot rolled coil price, I believe today, is still lower than the European price.
And like you said, it's the increased domestic price will also hurt the exports of higher end products. So probably the balance won't be affected that much.
So you will not see a lot of exports coming out of India for a while.
Yep.
No.
Interesting.
And they're buying lots of scrap. And not only containerized scrap, they're also buying bulk scrap, which has not been the case the last 5 years or so.
Mm-hmm. Yep.
And that scrap is coming also, for example, from Australia to India. And that is making more tightness of scrap in Asia, which increases the prices for billets coming from China.
Okay, the next question is about the GCC countries, and they're saying the GCC countries have been discussing VAT increases for imported rebar. What is your expectations for this issue? And if they decide on to increase the VAT, what will be the possible changes in the global rebar markets? Gentlemen, I think you are from that market. Please comment.
There's been a lot of talk or a lot of buzz in the steel circles about VAT for rebar. The fact of the matter is there is no such thing like that. The UAE, like the rest of the GCC, is introducing VAT, not for rebar, not for A, B, C or industries. They are introducing VAT. VAT will be effective 1st January 2018, not 2017. Yet to be decided is the level of VAT. Everybody's talking about 5%, 6%, what it is going to be. A. B. Which are the industries it's going to cover, which are going to be exempt. So there is, obviously, if it looks likely that for imported steel, VAT will be applicable, or for steel, VAT will be applicable. But at this stage, it is not clear. And there is no specific VAT for steel.
So let me understand that you're saying that the VAT number one is a talk, but then you're talking about 2018 is
Exactly.
the earliest.
Exactly.
And the percentage you're talking about is like around 5%.
Exactly.
And it hasn't been decided on which countries will have and which commodities will have and which. So it's really up in the air. Really.
Exactly.
So there's no effect on it in today's market.
No.
Just leading on from that, I'd be really interested. We were talking about this yesterday in the preparation meeting. What you think in your GCC region, the effects of the sanctions having been lifted in Iran are going to be on the overall steel dynamic?
Very difficult to say because on the one hand, obviously there's going to be no exports from the GCC into Iran, or especially from the UAE or Saudi. Iran supplying billets to the rolling mills in GCC, that could help, but very difficult to, as of now we are not seeing any impact as yet. The one impact which will happen probably for the UAE is Iranian money coming into the UAE economy, and therefore the UAE economy benefiting from Iranian money, especially construction sector. And in the UAE, construction sector is what is leading the economy.
Excuse me, let me understand that. You're saying that with the new sanctions being lifted from Iran, you think more money will be coming into UAE?
Exactly. Especially the construction sector, the property sector is expecting property sector has been what shall I say, under a little bit of pressure in the last year or two. Prices of properties have been falling down, but at the rate of about 5% per year over the last 2 years. But everybody is expecting, at least the industry is expecting, that with a lot of Iranian money coming in, that will change.
So the money that will be, paid to Iran from United States, you think it's going to directly come to?
We hope so. We hope
Directly,
so.
but it will be easier for
make a hockey stick.
That would be nice.
There will be much more transparency. The banks can operate. The Iranian banks, which are under tremendous pressure. There are Iranian banks right through the sanctions. They were operating in the UAE, but they were operating under very, very, very tight restrictions. I think that would be much freer. So Iranian can send money more freely to the UAE. I guess that's the bottom line.
Well, that's good to know. I was wondering how that will affect in those
Iranian
countries.
investment in the UAE. Iran and UAE have traditionally been very strong trading partners, but it's been hit over the last 5 or 6 years because of the sanctions, 5 or 7 years. I think that will change.
If I may just add, it's true that the impact would probably be primarily felt in Iran itself, where a lot of development may happen at a much more accelerated pace. because of much more transparency and ease of international transactions coming to the table, we may find a lot more investment happening in Iran. And therefore, it's possible also that some of the more competitively priced billets which were coming out of Iran, that might see a bit of a break, you know, if that's required for development projects within Iran itself.
The mills who've been exporting from Iran, they have rolling capacity as well, right?
Yeah.
I mean, so they could in theory
Yeah.
be producing bar for the domestic
Exactly.
market.
Exactly.
Okay.
Exactly.
Because I mean, Iran historically was a huge billet importer from CIS across the
Yes.
Caspian.
But of late, they have been exporting competitively priced billets
Yeah.
to various re-rollers in UAE and other places in the GCC.
I asked the same question to our friends in Turkey, and they've told me that that actually Iran is now a competition for Turkey rather than a market for Turkey, at least for rebar and billets.
Yeah, there was a billet export shipment from Iran to Turkey.
Yeah.
Uh,
So
two
when
and a half, 2
when the
months ago.
markets opened up, we were thinking that there will be a lot of steel going into Iran. Now it's really coming out of Iran. Well, let's go to the last section, which is something we have discussed earlier this morning, is anti-dumping issues. And the first question is anti-dumping measures in the key markets. I guess they're asking which markets they have anti-dumping going on. And as far as I know, there's obviously EU, USA, Canada, Turkey, Mexico. And if I'm not
Australia,
mistaken,
Vietnam.
yeah, a few years ago, maybe 2 years ago, I have looked at the statistics. The highest number of anti-dumping filed was by India, which I didn't know. Obviously, US is the main user of it. So any other countries that you...
No, I don't know any other countries, but all I can tell you, the American steel producers have perfected that system of anti-dumping and countervailing duty. I think we've seen in the case with the Turkish rebars, though, I mean about the case a couple of years ago, where they beat the system, or where they beat the anti-dumping rules. I think it's relatively fair, but the domestic mills have gone overboard with the amount. I mean, there is, I don't know, I didn't count it. I counted a couple of years ago, I counted 160 anti-dumping cases against steel in the US. So, I mean, it's enormous.
Yeah, but to be fair to the Americans is that since 2001, the United States has been filing anti-dumping cases against various countries.
Pardon me, what?
Since 2001, the United States has been filing anti-dumping cases in the steel industry.
Let me tell you,
Yeah.
since 1983, I
yeah.
started in 82. 83 they started investigation, and my God, at 85 we had the first pipe case that started, and I had whole ship coming, and really that anti-dumping case still lingers. It was in a circular pipe case, and it's like AIDS, never went away, still is there. So
okay, I stand corrected, but the point I was trying to make was that the European Union has historically not been filing anti-dumping
that's
cases.
right, I agree.
And the only case that we had on steel was the one 5 years ago on wire rod. And now suddenly we have 10 cases filed within 18 months. So that is a big game changer.
Okay, so they are following the example of the US.
again, some statistics for you. The first anti-dumping case filed was actually Canada. It started in Canada, and of course, U.S. just learned it very fast, and probably the better user of it because, and more user of it. The next question is, what is the impact? What impact will the recalculation of the U.S. Department of Commerce and of the anti-dumping duty for rebar imports from Turkey have? I'm assuming that they're trying to understand what is the effects on this anti-dumping and the recalculation will do for rebar coming from Turkey to the U.S. You mentioned a little bit.
Yeah,
maybe you
all right.
can-
I mean, it's the recalculation for the rebars is 3.64%. Let's suppose for a second that this will go through. I mean, the obvious answer is, yeah, it will have an impact on the prices. It's 3.64 minus 1.25, the level which is on now. Okay, so, and again, it's not much, it's 2.4%, but it's a lot
Why
for
do you
rebars.
minus it? Why do you minus the countervailing?
Well, I mean, right now, they have to pay 1.25%.
Oh, okay.
Okay, and it's going, potentially is going to 3.64. So
But-
the difference is what they have to
What
calculate.
I didn't understand is,
Yeah.
is 3.64 is anti-dumping.
No, it's CBD as far as.
It's all CBD.
Yeah.
Okay, now it makes sense. And really, the effects is already there. I mean, the mills, already are adding that to their pricing. And in fact, part of the increase that you see in the pricing is that anti-dumping effect.
I mean, and these dumping laws do have an impact on the prices, even if you are not affected, but you want to avoid it because it's a pain in the neck, it's very costly, and you always have to make sure that you sell the products that you export to the US in my case, at a level that is more expensive than your home products. You cannot, if it's under that, you have the potential of getting into trouble. And even if your export volume is relatively low, there's always that threshold that's being talked about of 3%. They can add various countries to reach that 3% level. Even with the low level, you can be stuck with anti-dumping. So these anti-dumping rules have the effect, the intended effect, that prices will go up.
The next question is, do you think we will see further cases from the USA until the market will be almost close to imports? Say yes.
Well,
that's the intention.
As long as there are lawyers, you will see more cases.
Yes. I actually, recently, the congressman from both sides went to President Obama and asked the administration to be tighter on the import restrictions. They are under the impression that U.S. is soft, so they want it to be tighter. So the general public opinion is that U.S. mills are suffering, they're losing money, and it's all because of the unfair competition coming from around the world. I mean, you probably all hear about our presidential race and how they talk about the unfair, situation coming from Mexico, from obviously China, and the devaluation of Chinese, yuan, and how much it affects the American exports, which was really discussed this morning again with I think the gentleman from Germany, Ulrich, yeah, that really that's not the effect, but anyway, that's the general consensus in the U.S. is that we are negatively affected by the unfairly traded steel coming from around the world. So it's going to continue. I think that's a good avenue for them to get out.
Right. And all the American mills want, as they always call it, they want a level playing field.
Level the playing field.
Level the imports.
Yes. Yes. Any other questions that you have that we can talk about? Any other subject? These are the subjects that were sent to us. You can ask any other that we can discuss. Well, then let's adjourn. Thank you very much.
And I want to express my appreciation for the comments from the floor. I thought they were very insightful.
Yeah, very good. Thank you.